everybody, and Happy New Year. It's 2023 and I'm here for your January market update. I am in Harvest Park in Mapleton, Utah at Keller Williams building, visiting a good friend of mine who is one of the partners here. There's a lot of activity still for those who are active in the business, and we're excited for a new year, and it's exciting to see their growth here in their beautiful new office space here in Mapleton. So pay them a visit. Dan Kennedy, Joel Johnson, if you know those guys, they're excellent, excellent people, human beings, and amazing at what they do. So pay them a visit down here in Harvest Park in Mapleton. My first update for you is to go to optoutprescreen.com and sign up to opt out. Anytime you have your credit report pulled by a bank or a mortgage company, that information is being sold by the credit bureaus, believe it or not, to other mortgage companies who are buying those as trigger leads. And so I have to warn my clients right before I pull their credit to say, hey, unless you've opted out, you're about to get hit with a dozen or more phone calls from, in my opinion, predatory lenders who are trying to take advantage of that situation. I'm not a fan of this practice. I think you should have to opt in and not have to opt out by default. So go to www.optoutprescreen.com and make sure you opt out at least a week, maybe longer, before you're about to have your credit report pulled. Second market update is that temporary rate buy downs are really gaining in popularity in this market. Well, what is a temporary rate buy down? It's when the seller agrees to pay for a temporary buy down of your rate by 1 or 2 or 3 percentage points. If you look at the economics, look at the math of what's happening right now with property prices coming down. Let's say that you're able to negotiate your new house price down by $80,000 and the seller pays for a 2-1 buy down. So you're going to pay $3.875 in the first year. Within 24 months, if you refinance, any unused portion of that buy down actually comes off your principal balance. It's not money that gets thrown away, it's money that goes back in your pocket. The other thing to consider is the math behind real estate purchases right now. A year and a half ago, you might have paid $60,000 more for the same house. So even if your payment is $500 per month higher, what's 60,000 divided by 500? And that's the number of months that you would have to have the higher priced mortgage before you're actually losing money on the sales price of the home. So take a look at that. It's giving people a lot of fear, but the temporary buy down is an excellent tool. It's a way to hedge, and sellers are very willing to pay for that if you have the right negotiation in your process. My final market update for you is for each one of us to look at our 2023 real estate goals. So every single one of you and me have a real estate goal. Whatever your goal is, I want you to be intentional. Be intentional about it, whether that's debt reduction, whether that's financial freedom. Be intentional, because nothing happens by accident in life, and before you know it, a year or 2 or 3 may have passed. So set your 2023 goals for your real estate. And if you have any other questions, or if you need any help setting goals because you have financial questions about buying or selling real estate, would love to chat with you to help you there. So that's it for your January 2023 market update. And I look forward to engaging with you this year and hope you have a very prosperous 2023.